In this topic, we will learn about taxation. Taxes are compulsory contributions made to the government, levied on personal income, cost of goods and services, and business profits. And the government body that is regulating this will be the Inland Revenue Authority of Singapore, or IRAS in short. Chargeable income is defined as the annual income minus any donations made minus personal relief for the year. And later we will show you some examples of personal relief. This is the table taken from the IRAS website. Let's first look at how to interpret this table here. If we have a chargeable income of $100,000 for that year, which row should we look at? Yes, we will look at this row whereby the chargeable income is from $80,000 to $120,000, whereby the first $80,000 we will need to pay this amount of tax, and for the next $40,000 we will pay a rate of 11.5%. Now, which row should you look at now if your chargeable income is $70,000? Yes, we'll look at this third row here, because this third row here will be for the chargeable income from $40,000 to $80,000, whereby the first $40,000 you will need to pay $550 tax, and for the next $40,000 you will pay 7%. In this example here, John earns an annual income of $87,500. He gives $2,000 annually to a charity, and he is eligible for a qualifying child relief of $4,000. He has a life insurance relief of $2,000, and he is given a parent's relief of $4,500. We are asked to calculate his chargeable income. To recall, the formula for chargeable income will be the annual income minus away the donations and minus away any personal reliefs that he's given. What this means is that donations and personal reliefs do not need to pay any income tax. And substituting in the numbers, we will have $87,500 for the annual income minus away the donations of $2,000 minus away all the personal relief. And his chargeable income will be $75,000 for that year. And next, let us look at how much income tax he has to pay based on the $75,500 of chargeable income. To do so, let us first understand how all these numbers are derived. If you earn less than $30,000, you do not need to pay any income tax at all. However, if you earn more than $30,000 but less than $40,000, you will need to pay 3.5% for this $10,000. And therefore, 350 is 3.5 over 100 times 10,000. This $40,000 is the same as the $40,000 here. And therefore, this amount here will be 0 plus 350. To get this amount, we will just need to multiply 11.5% by 60,000 to give us 6,900. So this row is for chargeable income from $40,000 to $100,000. For $100,000 of chargeable income is the same as this row here. And this number is derived from adding these two numbers up. Finally, for any amounts greater than $100,000, we will multiply 15% with that amount later. For $75,000 of chargeable income, which row should we look at? So this row is from 30,000 to 40,000. This row is from 40,000 to 100,000. And this row is for above 100,000. Yes, we'll look at this row here, which is the tax rate for chargeable income between $40,000 to $100,000. Now, let's look at how to find the income tax for the chargeable income of $75,000. Since the first $40,000 needs to pay a gross amount of $350, we will pay $350 of tax for the first $40,000. The remaining amount will be, yes, we still have $35,000 that we need to be taxed on. And this amount of $35,000, we will need to multiply the tax rate of 11.5%. And hence we will multiply 11.5 over 100. And the tax for the $35,000 of chargeable income is $4,025. In total, the income tax for $75,000 of chargeable income will be $350 plus $4,025 to give us the income tax $4,375 per year. In summary, the chargeable income is equals to the annual income earned minus away any donations given minus away any personal relief allowed. And that's all for this topic.